Hailey Bieber just made a haul. Her cosmetics business, Rhode, was 3 years old. She just got $800 million to $1 billion from ELF, eyes, lips, and face. Let's go through the numbers as to why this was a great transaction for her and for ELF, the public company as well. So very typical. You're a $5 billion company like ELF and you announce an $800 to $1 billion deal. Very typical. The stock trades down immediately because you're going to have to dilute the heck out of the shareholders, right? Take a look at that down print at 8 a.m. when the deal was announced. Guess what? Once everyone figured out how good this deal was, look at what the stock did. It absolutely ripped and has stayed up there because this is such a good deal for ELF. Aside from the fundamentals, there's one more factor that made this stock rip. That's short interest. Everybody was shorting this cosmetic company ELF because it didn't have any growth, and the short squeeze number on Bloomberg, that's this number right here, 63 out of 100. That is very high. 6.5 million people had short shares there, and they all had to run for the hills once they figured out this deal was so good for both parties. Let's start with a negative for ELF shareholders. An $800 million deal, we got to pay that somehow. There's $600 million in debt coming on. That makes our new debt pile $913 million. And we're going to issue $200 million in stock. That is only dilutive to the tune of about 3% of this $6 billion enterprise value. So not very dilutive, but we've got a debt pile we need to worry about. If you've been watching our videos and want to invest alongside us,
click the link in the comments. Select your brokerage.
Search for ticker RVER wherever you buy stocks.
Thank you, and now back to our video.
What do we get for our $800 million spend? We get a business with fantastic margins, 40% EBITDA margins. That lip pen that you buy for 19 bucks only costs like $2 to make. Let's take a look at what this looks like after. Hailey Bieber's business was doing about $212 million in revenue. Multiply that by the 40% EBITDA margin, and you get $85 million in new EBITDA at a much better margin rate than they currently have. Total EBITDA then pops up to about $315 million. Compare that to the new debt pile of $913, and we have 3x leverage. Remember, 2x leverage and below is fine. 4x leverage and above is a little shaky. This puts them right in that middle ground where it looks like they're going to be able to pay this thanks to these fat margins. So what now for ELF? If they can grow this business with the 40% margins that it has, you're going to see EBITDA continue to go up and to the right, just like it has in the 3 years that Hailey Bieber has owned this business and created this business. Fantastic buy by ELF here if they can continue to grow it going forward. Thanks for watching. We really appreciate everything you guys do. Like, subscribe, hearts, all that great stuff. Really fantastic. If there's anything you guys want to see, let us know.